Hi, it's Charlie giving you Monday's market commentary, and I'm going to quickly go through a couple of scenarios with you first, with a couple of traders, hypothetical traders. And secondly, I'm going to be away going on holiday this week, so there won't be any commentary for myself or live trading for the next, 3 Fridays. And so I'm not back until around about the 11th of August. If you're not getting any, I don't know. Kim sometimes does them when I go on holiday, so I don't know if Kim will be doing them or not. He might be. If not, I might try and do one on Wednesday. But it's like when you're just going away. We go away on Wednesday evening, so whether I get a chance to do all that Wednesday morning or not, I don't know. But anyway, let's go into a couple of scenarios here. So, firstly, we've got 2 traders. And we've got one trader who just loves scalping away and trade and having lots of activity. So he shorts here and he buys here and he buys here and he sells it here and then sells again over here and makes a bit of money here and he's just active, very active. He likes the activity of trading, and he buys it down here and sells it here, and he comes out at the end of a day like today and maybe he sells it again here. Took a little bit of heat, but then it came back. Took a few points off it there, and I'm sure a lot of you can associate with this that you like the activity of trading sometimes, and but the problem is with what this guy's doing is he's had a really good day, and so let's assume this is an intraday chart, and he's had a really good time, and it could even be the similar sort of thing on a swing basis as well, where he's just in and out, in and out, in and out. Then you've got one other trader. You've got trader B, who, let's assume this is a daily chart. All that trader B does, he's just been waiting all day for price to come up to here, up to this yellow line, and sells it there and runs it down to, let's say, here, and that's all he does. Now, and trader B has a stop up here, and trader B knows that obviously he might get stopped out, but he waits methodically for the right setup to come along and takes that. Now, trader B. That's a bit more of a boring approach sometimes, especially in the summer markets, but it works. It seems to work for him. Trader A is at this amazing day, and may even get several days like this, and is saying, well, no, I've got a lot more going on. I'm doing all these points and everything else. So, but then we go to a different scenario. So let's bring up a different looking chart, and now go to similar sort of thing again, where you've got trader A buys here and he starts off again. He's starting off having a good day, and he buys down here and he sells here, and then he sells here and he buys here, and he's thinking, oh, this is great, I'm having a great day again. Then he buys down here, but it doesn't quite go up far enough. He doesn't get to take his little bit of profit off, and it comes down a bit, so he adds down here because he's so used to making money, and it comes down again. Oops, adds again, and it carries on coming down. Adds again, thinks it's going to bounce here, but it doesn't. It rolls over, adds again, and then at this point he's absolutely sweating because he's added. He's now well over leveraged, and then finally just comes out usually down here at the lows, just got too scared and exits, and so often is the case, comes out at the lows. And what happens is this trader then gives back not only the day's gains, but usually at least the prior days and probably the prior week's gains. And sometimes when they do this sort of thing, they can be giving back a whole month's gains. So, and yet trader B just came in. It was just a normal day again. Trader B was just looking for a setup. Trader B sold over here and ran it down to here, and that was his day. So you've got 2 different types of traders. One trader is absolutely sweating and having almost heart palpitations on a day like this, and you've got another trader who's it's just a standard trading day again. So you have to look, and I'm sure we can all associate with trader A, who wants the activity of trading, but in the long term, that type of trading style, just trying to go in and out, in and out, in and out, and adding to positions and being a bit erratic, ultimately won't work. It won't pay out in the long run. You can be all right in the short term, but in the long run, the market will come and get you. Whereas trader B, a lot more methodical, just follows the setups that trader B looks for, and will, in the short term, could underperform trader A in the short term, but over the longer term will always outperform. Right, okay, so just a little bit of food for thought there. I'm sure some of you can associate with that quite fully. Let's have a look across these markets then. I'm just going to go through a number of different markets across the indices and everything, just to and literally just say, as I'm going away, right, okay, where do I want them to go? Right, so firstly, what we on? Dollar CAD, here's the daily chart. What I'd like to see, yeah, I'd like to see more upside on dollar CAD. I'd like to see us above 108. So that's what I'd like to see on dollar CAD. We can back and feel for a bit, but overall, I'd like to see more upside on this. I think these. I don't know if these lows are going to be attacked just yet, or at least penetrated. So I'd like to see more upside on dollar CAD. Let's have a look through a few of the others. Euro dollar, it broke down last Friday and broke these lows, which is good because it means it took out a load of stops, but then it's come back with a nice doji, double doji actually, a bit weaker today, but I'd quite like to see the euro dollar have a little bit of strength come into it. I'd like to see 135.50 broken, and if 135.50 is broken, then I think we'll easily be up into the 136s. Otherwise, then yes, we could come down and have another flush, because obviously it could want to come down to the lower 130s. But at the moment, we've done this big double bottom, taken out a load of stops quite nicely. There's other factors going on, but so I'd quite like to see that, but we need to see 135.50 closed above first of all. The pound dollar is a little bit less clear actually, with a lot of the price hikes, the interest rate hikes, and the performance of the economy is all priced in now. In which case, it could very easily want to drift its way lower. It's been very sloppy chart of late anyway, since the beginning of July, like a lot of charts have been, so it makes it very difficult to really read too much into anything that it's doing. So really, if we can get back above 171.50, then I think 172 should be a shoe-in. Otherwise, I think it's just going to continue to drift. So there's probably other markets. Now, Aussie dollar, again, another market which has been very, very sloppy over this past month or two. But I would still quite like to see Aussie dollar roll over, and so I'd like to see Aussie dollar sub 93. So even though it's sloppy, that's what I'd like to see on the Aussie. Let's have a quick look at gold and oil. Gold came down to its monthly pivot, which was down here just below about 12.96 last week, and has had a nice bounce off of that. Bounced into its 21-day moving average and the upper bands here. So now it's a case of, well, where does it want to go to from here? If we can get a close above 13.30, then I think we're off to the races, and we're still going to target that 13.70 level on gold. But otherwise, if it stays below that, then who knows what it's going to do. It's just going to get sloppy again. Oil, all the time it's below the daily 50 here, then obviously it's a slightly weaker market in the shorter term. If we can get a close back above the daily 50, then look out 107 again. And then lastly, let's have a look at the stock market indices. Yeah, so the Dow obviously put a key reversal in last week, but then it's immediately then reversed it. And actually, it's probably a bit clearer because the other markets didn't do key reversals. The S&P didn't, and I don't think the Nasdaq did, and they've immediately come back up. The S&P, we've got divergences in the background on the weekly charts. So unless we take out Friday's lows, then I think the S&P will want to seek out that 2,000 round number level. So especially if we can take out last week's highs, then that's adds a lot more weight to it. But if we do take out Friday's lows, then I think we've got a sell-off coming for a good month or so. So if we take out Friday's lows, so there you go. That's across the stock market indices really. What else is there? That'll do. That'll do for now. We're 8 minutes in, so I'll leave that with you. Those are just my broader thoughts without going into too much details. Quite looking forward to taking the break and not looking at the markets. It's quite good sometimes to properly shut off. I say I won't be looking at the markets. I will be periodically, but not every day. So so that to me is a break anyway. So it'd be quite nice. And then coming back right in the thick of the summer markets in August. So that will be interesting. So for those of you that are around in August, just lower your expectations as the kids start breaking up this week from their holidays. Usually the markets get even lower volatility. Usually, not always. But if they do, then just cherry pick your trades. There are still nice setups around, but lower your expectations overall. You're not going to be trading, as necessarily as frequently in those summer markets when they're a little bit slower, and that way you'll be fine and enjoy the summer. So I'll see you in a few weeks.